Hi traders, Nathan Bray here from ACY Securities. Let's talk about consolidation and potential trend reversal. So I want to talk about this concept, and I like to talk about them when I'm seeing them happening live. So right now, we'll focus our attention on the New Zealand against the US dollar, or its sister or brother, or whatever you want to call it, the Aussie against this US dollar. So the trend against US dollar has been very strong and in one direction. It's been down, both on the Aussie and the New Zealand. But what I want to try and get our head around is this idea that there are some things in life, okay, that you're going to need. You're going to need to buy them. For example, in my case, it's like, earbuds. There's a point right now where I'm going to have to buy them. I know that. So if I see them on special, right, I'll think I might need them right now, but I'll go and buy some because they're so cheap. And that is the concept I want you to consider when we're talking about currencies. So currency pairs, there's some point due to the fact that both the New Zealand and the Aussie, okay, as in the currencies, the economies, they're seen as commodity-based currencies. So at some point, countries around the world or companies or banks, whatever you want to call it, they're all going to want to buy some iron ore, or they're going to want to buy some gold, or they're going to buy something where they need the commodity at some point in the future. So they do the same thing. They'll look at, wow, that Aussie and New Zealand currency is down, it's extremely cheap. Okay, so is it possible I just want to accumulate some of that price? So this is the concept that perhaps we should get in our head, because I know when the trend is going down, but when you are talking about the bottom or the top of massive ranges, so right now in the crosses, we're right at the bottom of these ranges. So at this point, there seems to be, as a medium of exchange, piranhas just wanting to buy it. You're selling into it, but there's always a price point where they're just buying. Whatever you're selling, they're buying, okay? So let's have a look at a chart right now on the New Zealand against US dollar. So you'll see down around this 55 level previously, and we're going purely based off history, you can see at this price point, there's a lot of buying activity. I mean, no one wanted it. They were just selling it and buying US dollars, and then all of a sudden, there's a price point. It's a bit like Campbell's soup, 99 cents, everyone wants it. $1.15, no way, I'm not paying $1.15. And at this point, we start to see the accumulation occurring, meaning it's having trouble going lower. Sometimes it's referred to as major either support or resistance levels, floors in the price or roofs in the price, okay, that we can see. So this is the type of patterning we're experiencing at the moment. It can't get through the floor on this New Zealand against the US dollar, and we're starting to see a pattern forming where as it goes down, the buyers who were willing to buy at 55, well now they're willing to buy at 55.50, right? So therefore we get this increase in the price people are willing to pay, and at the same time, the sellers that were willing to sell down there, they're not willing to sell down there anymore. It's like a floor has been put in place. All right, so you can see this pattern. Now, keep in mind, the buyers or the sellers may get exhausted. Something may change, and this trend could continue lower. But if I start to see a structure, a price action structure of higher tops and bottoms forming, I'm looking for a pullback and changing my bias as a result of the accumulation. And when we're talking trading, we're talking shorter term trading opportunities. Now, to prove this point, what I tend to do is go and look at another level. So let's go and look at the New Zealand dollar, but this time at the top, all right? So I believe it's around this 87, 67 level from memory. So you look at this same pattern, it's like people were willing to buy the New Zealand dollar up at that level, and all of a sudden, the sellers started stepping in, and eventually the buyers started disappearing. Then we get this corrective phase. And then it says, hey, all right, the girl said no to me last time, maybe I'll just ask her again, right? I get some courage, and you'll see what we call a retest. So price then goes back up and retests that. And we've got an expectation that this can happen. So they go back up, it retests, and eventually it gets rejected again. So then we see price put in a lower bottom and the game continues. So my question is, looking at this type of behavior, are we seeing the same type of behavior now at the bottom of this monthly range? And the rationale behind it for me is someone is willing to buy something or needing something. There's a price point where it's cheap, but conversely, there's a price point where it's too expensive, okay, based on their need. And I feel like when you're dealing with currency pairs or commodities, where they can deal from price point to price point in big ranges. Why? Because they're a medium of exchange. It's not like New Zealand's just come out with this great new football team, which they have, by the way, or this great new product that they can sell for a lot more. It's not like a stock. We are talking about mediums of exchange. So therefore, I feel like we have a better understanding of trying to identify this type of period where price can't get much higher outside of that range for very long, or it can't become too cheap because it's a medium of exchange. That's all from me, folks. Enjoy these periods in the market, and let's see if this leads to a deeper correction or a complete reversal.